The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Thursday, the 13th of June. We're looking at the S&P futures, the E-mini, is up 475 at 5,432. It did spike up earlier this morning at 8:30 with economic news, and ran all the way to a high of 52.75 in the 5-minute chart. That was a peak deep. But you remember, we talk about patterns that repeat over and over, and I'm going to suggest to you, maybe I'll have to do a webinar on this over the next week or so, that the patterns that we're looking for over the next few weeks could very well be the straight look. We're always looking at three patterns: straight line up, straight line down. That's one. Cup formation. That's two. Could be a V, but it's really from one point down and then back again. Or an arch formation, 1 point up and then back down again. Or a mix of 1 and 2 or 1 and 3. This is 1 and 3. That's the dreaded H. It's where you go up and you fail, and you go up and you fail, and you go up and fail. Usually at a peak A or a peak B, the first peak or the second peak, and then you take out the left side low. Ha! Wait a minute. Look what happened here. We had this huge leg, and the Chapman wave objective is to get you from a buy signal to an upgrade buy mode, going from a buy signal to a buy mode, meaning that it should go to at least 4 higher peaks. That's at peak D, the fourth highest peak, peak A, peak B, peak C. Fourth highest peak is peak D. That's where other things can happen. You can come straight down, have a rally. Usually it only goes to an A or maybe a B, but sometimes a C. Then it rolls over. If it takes out that left side low, you can have a 1-to-1 to the downside. So we've almost accomplished everything there. It's gone. There's the 5-minute chart. There's the pattern. You see, there's the lowercase h. And now what we're looking at is there's a chance, there's an attempt, yet another attempt at a buy signal. And we're going to see if that's going to be able to hold, because here's the 200-period moving average at 54.34. It's like a magnet line. Let me just open this up so that you can see better. I also want to mention, for those of you who trade options, keep in mind that, let me just get this open here. Keep in mind that very often from the close of the previous day to the open of the next day, you can sometimes go for a long time in a very narrow 10-point horizontal, sideways, narrow trading band. And in this particular instance, the 5-minute chart just used this 200-period moving average as kind of a magnet line, went under it, over it, under it, over it, under it, then sprang at that 8:30 time frame, sprang much higher, came back down. Then the green line went pink. And it's still pink. That's negative because the 9's under the 14, the 5-minute E-mini S&P. And now look what's happened. It's gone underneath, and it's attracted to that line. It keeps coming back to that line. And this is with that V-shaped pattern and the on-balance volume, relative strength a little bit improved. You're going to see whether or not it's able to get to the 54.40 level. It's at 54.34 right now, anytime in the next hour and a half. If it can do that, that says, you know what? We're not quite done, even though, and this is going to be really important. So let me just go through this. I'm going to run the numbers. Here we go. I'll do this quickly. The last thing I was looking at was bonds. So bonds are up 730 seconds at 119 and 1230 seconds. Not bad action. There's the daily 200-period exponential moving average. It's right on it as we speak. It keeps coming back to it. It did a beautiful 1-to-1 expansion. Look, it's hitting that number right now. And now I'm going to do a little bit more work on this. Remember, with technical analysis, yes, you can have numbers that are absolutely precise. You can have measurements that are geometrically precise. But at the same time, what I like to look at is using techniques to use a particular technique in such a way that it is pliable, it is adaptable. It isn't a fixed thing, because numbers don't always hit exactly. But look at this trend line here. Let me get rid of this Fibonacci. It's getting a little crowded. It's not necessary right now. So look at this. This green line, which is a downtrend line, make it green right there. I always like to make it with like a 1/16 of an inch or something like that. Very technical term. I like to put in an inside track repellent or propellant line. So this is it. So it's a little more than a 1/16. And what I'm looking at here is the price certainly taken from the high that was made in bonds and the yield and the bonds themselves, 135 and 4/30 seconds. Now that's a price that can change because it's a continuous contract, but it's the high of the week of the 7th of April, 2023. Then 5 weeks later, it pulls back and that sets off a potential trend line. Well, that potential trend line just broke fractionally above right there, the week of the 29th of December 2023 at 126 and 2/30 seconds. 5 weeks later, it retests exactly on the trend line, and then it pulls back and it touches the trend line 4 or 5 weeks later a couple of times, can't break above it. And what does it do? Last week, it goes right to a leg B. It's really a gray leg B because the stochastic's still only at 43%. On balance volume is barely turned up. So stochastic has crossed positive, but that pink 9-period moving average is still saying, be careful. Now what I'm looking at here is this leg B that was from last week went right to the green line. It couldn't break above it. We pulled back. And then this week, so far, the week is young. We've still got a day and a half to go, more than a day and a half to go. But what we're looking at is it went right to the door this morning. It went to 119 and 23/30 seconds and is holding at 119 and 12/30 seconds. Is it for the first time going to make a cup formation? It's a little lopsided right now, but it's a potential cup formation right there, and have yields go lower because the bonds are going higher? This is going to be the question. It isn't a clear, it's just not clear sailing right now. It's hinting very strongly, certainly in the daily chart. But look, the daily chart stuck at the 200-period moving average. The weekly chart of the bonds, the 30-year Treasury bond fund or bond, is trading right now at that resistance level. It's a work in progress. All right. So I wanted to show you that, and because I think it's very important. The other thing I wanted to show you here is, okay, let me just go straight to it. SMHs. Now, I want to do again attempt. I haven't done it for just a couple of days. We did do it with the S&P, and I think that this is probably the safer way that I could have done it this morning. But I'm prepared to wait a little bit. I think that this leg D in the SMHs is telling us, regardless of Avagio, which is Broadcom, AVGO, that spiral to the upside opens at 1,710 round number, goes to 1735.85, and now it's at 1694, just a little bit lower. But I'm calling this a leg C. And I'm calling this in the weekly chart a G/C and the monthly a G/C. So yeah, kind of consensus all the way around, saying that it's unfulfilled, hasn't completed. But what I am going to tell you is this: look at the SPY. Oh, I'm going to do that. Let's see if I made a mistake. I think I did. Look at the SPY. Here we go. SPY is trading under yesterday's high. I think this is peak C, and there's a chance that we just pop one more time early next week and then turn down.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So let me just go through this right now while I'm thinking about it. This is the dollar. The dollar is up 17 ticks at 104.88. We're actually still long from 2018 at 90.07 via the UUP. So far, I haven't had any inclination to actually change that designation. We've taken a little bits of profit. It's been all the way to 115. It's even been higher than that. But at this particular point, it's more an icon of economic activity in the U.S. and also in the desirous. It's a desirous currency. It's just as simple as that. Look at the EUR-USD. This is the euro-dollar currency pair, sort of stalling with a pink 9-period moving average. The weekly chart sideways, not going anywhere, so it's going sideways. Look at the USD-JPY. That's the yen. The yen is trading, holding the 9-period moving average, going sideways basically, but holding everything quite nicely. So nothing really has changed there. Talking about sideways, you remember I spoke about this. I said Tesla is in this rectangle formation, and until it either breaks the 167 support or the 187 resistance, it should be stuck in a sideways trading band. Based on the 200-period exponential moving average of 196, it's been trading under that, except for one close that was back in March, the week of 3rd, was it? March the 1st. The week of the 3rd, it went to 205.60. But basically, it's been underneath. Yes, it's forming. You can call this a potential head and shoulders, all sorts of things. I'm not really interested in that, or inverse head and shoulders. What I am looking at is that the pink 9-period moving average of the weekly chart has just been negative. Yes, the histogram in the MACD's improved enough for it to go positive, and the stochastic has rallied, but it's only at 62%, and the blue on-balance volume is not that great. So I think Tesla is stuck in a range. I don't want to go into anything about Musk and his, 52 billion, not million, billion. How much is it? Whatever it is. These numbers are just, they're useless to us. They're just numbers. But they're not useless to Tesla because the stock is saying that it's been in a trading band, buffeted by mostly bad news, but occasional little bits of good news. And then I had this, if I can find it, I hope I can find it, that Gary had sent me. Now, can I get it? Let me see if I can get it. If I can, it'll be under this particular address. Okay, so there it is. So that is, yeah, how about this? NEO, a low of the day, 9.36. Lower revenue for the first quarter. Deliveries declined. June deliveries are expected to be between 17,800 and 19,800. That wasn't what I want. Oh, China. Penetration rate of EV is expected to reach a new high in May. Automobile trade-in subsidy. Yeah. So, I mean, a lot's going on there. Taxes, all sorts of things that are going on. So I don't think it's clear sailing for any of the EV companies. You just can't be sure of what's happening. But I did want to do this. Look, here's General Motors. We looked at it the other day and was doing fabulously. And it had this big spike and it had a doji candle with another doji candle yesterday. Today it's pulling back a bit down, $1.13. This is a potential Chapman wave instant restart in the weekly charts. I'm calling this a G/C. I always have to do that when you get within 3 bars after a peak D, you get higher high, and that's what you got right there. Let me just circle it. I always put a little yellow circle around that. And how about that? It's still moving higher. So they aren't all doing the same things, but I am impressed with the fact that General Motors is doing very nicely here. Okay. With that said, I had a question about Whirlpool. Well, I haven't finished all the other things I wanted to do, but let me just go to Whirlpool. Whirlpool. W-H-R, right? H-R? I should know, but I never remember it. There it is. So I just did a quick update right here of the daily at a leg B, probably a peak B today. But then I found stuff that I had done ages ago. And one of the reasons is I was asked about this. I think it was, quite a while ago. I wonder when the last notation was on the daily chart. That'll give me a sense of when I was asked. Yeah, that was asked about March, right, somewhere around March. I got that peak D and then a pullback. And the question came in, with all the buying of homes, new homes, even though there's kind of a little bit of a pullback in that sector, this was back in April, March. What do I think about something like a Whirlpool? And what I'd said is, if I'm correct, if memory serves me well, there's a direct relation to all those home good, or the home kitchen equipment, etc., bathroom equipment, whatever it is that has to do with homes pertaining to sales, but the projection out is not always accurate in home sales. So what I like to do is I like to look at something like a Home Depot. And this was back in, so that was, Home Depot was on its way to a new high, wasn't an all-time high. That was at 42.61 in December of 2021. But this was somewhere around that March period. And what I'd said is, because it is under the previous high, and yet the home builders, let's go to Toll Brothers right now, Toll Brothers, but Toll, Lennar, HGX, the Philadelphia housing sector, well, they were on their way to highs. I said that it was very difficult for me to put the two together, other than to say that Home Depot, and I think it was Lowe's as well, was giving me clues that the projection out of the sales of the houses was not as reliable to me as the Home Depot. Let me go to Lowe's, L-O-W. Is that the right Lowe's? L-O-W-E-S? Yeah, that's Lowe's. So, and Lowe's had the same thing, going to its high, going to a peak D, And that was an all-time high. So I had a kind of a mixed picture. And at the time, I can't remember who it was. Right now, I've got a picture exactly of who it was, who in the den asked me, but I can't actually remember the name of the person. I can remember someone in the den asking me. That's what I'm saying. So all I can say is that I then was very unsure as to give a statement to say, I think that Whirlpool and the others in that area are going to have a tough time. But I do remember saying, Home Depot is saying to me, I would rather believe Home Depot than I would something like a Lennar or any of the home builders. And that's just the way it was. So all of a sudden, a week and a half ago, we get the low that was made in WHR, Whirlpool. And there's a really nice bounce, and it comes back, but it doesn't take out that left side low. It doesn't make a dreaded H, in other words. And then it makes a higher high yesterday in a sec. I'm going to make this suggestion. And I think this is a really good question, but I think it's early. And my suggestion is hold off. I might be wrong, and it's got so many resistance levels to get through at 97 to 100. I'm just going to say hold off. Let's look at it again next week, maybe Tuesday or Wednesday. I can't say yes at this particular point. Hold off on Whirlpool. I'll be back. Dow's done 255.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, we are back, and just as we're about to go back to our first caller, I just wanted to mention I had a question about this because someone saw me doing this during the break. That was as I was coming on the show at about 10 o'clock. I drawn in a little rectangle at the bottom here, and the question was, what is that rectangle? That is a measurement, a one-to-one to the downside, based on a particular technique. And what it said is that the E-mini, if it was going to break certain support level, should go to a low of 54.19. And it actually did that. It went down to a low of 54.17.00. So that was that particular technique. So all right, let's get to our caller. We've got Garo in Newport Beach, California. Garo, how are you?
I'm very good, sir. How about you?
I'm well, thank you. And you want to look at Insmed Inc., diabetes company. It's a biotech, trading at INSM, trading at 64.02. And I'm just going to take a wild guess. And I'm going to say you are long a couple of thousand shares or a couple of hundred shares at 58.
No. I do that on a daily basis, sir. I'm afraid to stay in it. Today I bought it on 15 minutes at 62.28.
Oh, so
I bought 200
okay.
shares at $62.28 when the candle hit on the 15 minute and the dot went down. And that's where I bought it. Here, my question is this, Mr. Basil. INSM is a component of LABU. LABU is a directional daily S&P biotech.
Biotech, yes.
Yes, sir. But there are 10 of them in that LABU. One of them is INSM, and I follow that. And I trade that on daily basis because It's gone up like a wall. It's very dangerous to stay in it.
Yes.
So I cannot find a resistance for it at all. Not on my chart, not on that Warren Brothers chart. So I would appreciate if you have a look at your chart, see that, because the daily and the weekly is gone up. It popped up on 28 and still is on the upside and going up like a wall. So I would appreciate if you give me your idea, please.
So real quickly, Michael. So you have a second entry point on the 50-minute chart. Is that correct?
No, today at 9:30 California time, no 6:30. I'm sorry. I bought it at $62.28. If you look at the 15-minute chart, you will see that the candle hit at that dot, and the dot goes down. So that is where I enter.
Oh, okay.
And 62.28. And still I'm in it. I should have gone out at R2, which was 64.34. But I'm going to get out anyways after I hung up with you. I will get off from there. But my main question is this: that where this is going to stop and it's going to correct itself.
Well, it's in the process right now on a very short term of stalling. In fact, I think I would recommend to you, I would get out because you were thinking about getting out right here, even though it might just need a little time to digest and then have another move to the upside. It looks like it's about to make a dreaded H pattern. So I'm going to recommend I would do that because you've got a profit. And it's elusive because that the 1 minute, 5 minute, and 10 minute chart had that really big pop up to the high of 64.98, and now it's taken its time. You see, if it didn't take its time, I'd say, hey, this looks like it wants to go back. There's a particular rectangle formation that I talk about. This is now turning into a long, narrow rectangle pattern. So it's used up the time it needed. If 15 minutes ago it popped to 64.38, I'd say, oh, that's much better. It started to make higher highs. right now it's not breaking down, but it's just kind of stuck.
Okay. I already sold it. 63.90. I got out of it. No,
good.
This is the first part. Yeah. The second part is that where this is going to stop on a daily chart, where the resistance is, and where this is going to slow down and curve and correct itself.
Okay, so then let me go to my chart that has the automated Chapman wave notations. So 69.87 is the daily, one of the daily resistance levels. Funnily enough, I don't have very much in the 120, and I've much higher. You know, this is the way it's working its way towards the just above the 9-period exponential moving average. I think this is looking really nice. It looks to me like, let me just do this on the weekly. See, this is a breakout. Is this a breakout to, I don't think it's an all-time high. Yes, it is. I think it's an all-time high.
It is. Every day is going all-time high. Absolutely.
So my recommendation, and you've got a core position, and your question is there a particular number or a particular a trend line that would say, hey, now you've got to be a little careful? Is that correct?
Yes, I want to know that number. I cannot find him anywhere in my charting system.
So I've got something right here that takes you to 69 to 69. And I've got that as a trend line, and I'm going to make this green and then red. I talk about this technique that I call the inside track repellent zone when it's going up. So this is what I'm going to say. And it doesn't say that you have to get out. It just says you want you to know where I can see a very long-term trend line resistance, and that says it starts at 66, and it goes to about, it depends what week, this is, what month. So let's go to the high of 60. I must make sure that I've got this right. Yeah, 69. So that's looking out. That's looking out a little bit of away, and not only that, it doesn't tell me anything about any pullback that occurs. But this is a pattern. I love this kind of pattern. It is such a challenge, but it is a one that when you look back, every bar you say, I could have bought it here, and I could have bought it here. I could have bought it, closed my eyes and bought it yesterday or the day, because it just keeps making its way up very gently with a candle that has a higher high and a higher low. And this is a leg C. If I'm correct, that the starting point was the gap up the day after the low that was made at about 24, back around the 28th of May. I like this. It's only in leg C. I think it's going higher.
Very good. Thank you, sir.
Okay.
Thanks so much.
Thank you for calling, and congratulations on your trade. Bye-bye. We'll be back, folks. Down 240.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So the 200 period exponential moving average in the 10-minute E-mini chart is 54.24. It really needs to push very sharply into the 54.33 is the 200 period moving average 5-minute magnet line. Can it get there? Okay, let's just get back. So there are a bunch of things that I had to get to and I didn't. So let me go through this slowly one at a time. We're looking at AVGO. Is that the daily chart? Yeah, made a round number high today. Is that what I had written? Why don't I write so that I can read? Oh, ANET. ANET. ANET, look at this. A round number, 327 open on the 16th of May, has a 329.07 high. Comes down sharply. It makes this pattern that we were looking at just recently, and this is a gray B right here. Gray B. So look what happens. It pulls back, goes from green to pink in the 9-period moving average. So that should get down. I haven't updated. I just saw it a little earlier on. I was just checking it out because it showed up as a big winner early this morning. And now it's gone to a new high of 329.93, right? So that is, now the question comes in, is that leg B? Well, what I do, because the starting point of the at 240.32 back in April, that hasn't been taken out on this pullback. This pullback to 279, was it? 289.41. So that means that this is either an A, which was there, and an A that is there, and now it overtakes both of them, so it's a B. But it's also taken over the high that was made, the all-time high of that peak E. So I automatically say, look, because it's still on fire from the 240.32 low, this means I, just for my own purposes, to be prepared for anything, I have to call it an F because it picks up that previous E, and a brand new B. It's just an easy thing to do. I haven't made any changes. I haven't given a sell signal or anything. The technicals look, the 9 went positive. This is ANET, Arista Networks. It's a leg E. This could even change, but here it's an E in the weekly chart and an F, and that could change. This is an instant restart in a monthly, and I couldn't tell you over the last 2.5 years how many times I've notated how many monthly charts had a Chapman instant restart, and then it continued higher to turn out this could be an F, and this could be an alternate account, F/B, in the monthly chart of Arista Networks. Very nice. All-time high right now, looking good. I just wanted to show you that I could do other things. I don't want to take time. And that was a question 2 days ago someone mentioned, and I completely forgot it. So when I looked at it today, I said, oh, look at that. Had that round number high. not the exact high because it was the day of the high. It went to 327. So, all right, that's important. Next thing I had was a question of RSP. Now, this is the reason why we did go short the other day, the S&P, very briefly, because the S&P 500 equal weight ETF, like the Dow, is fading. It hasn't gone to a new high. The high that was made back in, I think it was March. Was that March? Yeah, March at 169.80. I thought it was a 00. 169.8. I'm going to type that in. 169.80. Look at this, 169.80. We haven't gone even close to it. The last I was 160. Oh, well, I shouldn't say that. It did get fairly close to it. So it went to 160. Yeah, it did. 167.90. That's close enough. But it didn't break it. And it's stalling. It's making an H pattern and a peak D already for the third month. Third month. It's the third month. It's at a peak D in the monthly chart. And that's the reason why I'm saying something's not right. Look, here's the Dow failing. Didn't make a new high in the rally, the last rally. This one failed. Others were making highs yesterday. This has got a 40,077 leg D, made a peak D on the following day after the 20th of May high. The reason why we're still short, that's short term because we're still long term long from way, way, way down. But have a look at this IWM. This is an ugly, ugly candle. This is a divergence that I think I'm respecting. Now, I was going to slap on a couple of shorts today, and I said, you know what? If this is going to be turned around, I've got to be very thorough about it. So I went through this and I said, look, the SMH's semiconductor leg D. So it's ready from a D, you can turn around. But look, the stochastics at 93%. Wow, you have to get bad news to really get a sell-off, right? Number one. Let's go to, just briefly, we'll go back to Broadcom. Gaps up. I don't see how I can call this anything else but a peak, a leg C. There's no other way in the Chapman wave count. So this is a C. All right, forget about the weekly, monthly. I'm talking about the daily. So that says there could be a pullback and there may be one more nominal high. Even if it's a nominal high, I have to wait there. And you can just look at advanced micro devices, way down off the high that was made way back in March up in the 220s. And here it is at 157. I don't want to go through them all. They're all kind of doing different things. Here's Micron, all-time high. This is, I think it's an all-time high as we're speaking at 143.33. Is this an F or is it a B? Everything's positive. So the notation at this particular point, I would say that from here, A, B, C, D, E, F, maybe it's a B, but I'm just going to be a little bit conservative and say F. But wait a minute, the stochastics at 92%, everything. So this is not ready. And you remember I did this, I've been doing it for not weeks, but months. I'm saying, here's the SMH. The 9-period moving average was so close to at least starting to dip towards the black 14-period moving average, the green line. Didn't. Look how high we are. We're at a level. If I had to do a measured move on a percentage basis, this is becoming overbought. Doesn't mean to say that it has to go. It's like new highs, stocks that make new highs or indices. They tend to continue doing that. They don't know they're making new highs, right? I mean, that's the way. Does the dog know it's wagging his tail? No. So this is what I'm saying. I'm not quite ready. But the bifurcation is something that we're going to have to assess very soon. No, that wasn't a new high. That's 135.57 and 135.85. That's another high. That's a high following bar high. So that isn't okay. So I just wanted to say not ready, very, very close, but not ready. And very close, I'm just saying for some kind of a breather. Now, let's go to the XLF because I was asked about that. Yes, the XLF, I don't like the fact that the financials are, look, the weekly chart's still great, but that daily chart, that's a serious move, 42.49 down to 40.57, and it's done it in such a concerted way, a dreaded H way. Look, the dreaded H right there. Look at KRE. Ooh, scares the daylights out of me. That's even worse. This on the sideways move in the monthly chart, this S&P regional banking. So let me go through my notes here. I don't want to skip anything else here. So look, NTR. Question came in about NTR. NTR, this is a nutrient. It's in the potash area. What's going on there? I was asked the other day about Moss, the Mosaic company, phosphates, potash, crop nutrients. Took out the left side low. What is going on? So, okay, so I've said, what is going on? ADM, Archer Daniels Midland, going nowhere, hasn't even filled in the gap.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento on Friday, June 14th and Friday, June 28th this month for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryJune24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So I'm going to hand you over to Steve in a moment. But before I do that, I just wanted to mention, we really don't have to do much sales talk when it comes to Larry Pesavento, because he whatever he does it so well, and he's so articulate, and also he gives you the parameters to look at, and he tells you what happens if certain levels are met or exceeded. So he's very precise, and it's so educational. So tomorrow he's doing one of his bi-weekly, bi-monthly, is that called the bi-monthly? Bi-monthly live sessions. Should be fabulous. They've been extremely successful. And if you really want to learn, whenever I have a chance, I love to go to the webinar. I love to just get some edge. He trades everything that moves in the commodities, not everything, but a lot. I just stick to the futures, the E-minis. But it's so educational. So I'm just recommending that if you really want to learn about the subject of trading and what to look for, using the measurements correctly, and then putting in your stops and just handling the positions so well. Perfect time to be doing that with Larry. So let me just do this real quickly. So as I'm looking at this, you see the failure of each rally to make, and now it's making lower lows in the E-mini. This is the 5-minute chart. You see that pink 9-period moving average joined by the pink 10-minute moving average. So I think we just start to see, based on the attrition of buying pressure, that the selectivity just can't keep going like this. I mean, when you're looking at the retail like Costco, et cetera, and you're looking at the semiconductors, everything else is just is failing. You know, I looked at so many things. I look at, you can look at, we looked at Whirlpool. That should be doing well, and it's not. So it's very selective. This movement is becoming even more selective. So I'm just saying, be a little careful, be very selective, put in tight stops. Don't be afraid, but I am kind of concerned that the financials are starting to be disappointing. Check out my opening call daily newsletter.